What's going on, you guys? It's Royce Jacob. Welcome back to the channel, and in this video I want to give you guys my top 3 stock picks for the month of July 2020. So as you can see in front of us, we have a little write-up that I made for you guys, which consists of the 3 stocks we're going to be talking about, followed by their ticker symbol, followed by a little emoji. Underneath that is a brief description of what the company does, what the stock is, and then underneath that is a summary of why I'm currently bullish on the stock. So we will go down the line here. We'll take a look at each of these guys, and as we do that, I will bring up their charts on Robinhood, which I have mirrored here for you. We'll take a look at the charts on a very bird's eye view level. Not going to get too technical. That's for future stock talk videos. If these continue to do well, like I believe they will. But this video is more just to put these guys on your radar. Obviously, there's many other stocks that I'm bullish on going into the month of July, but I have been talking about them a lot on the channel, and I wanted to bring you guys some fresh content, some new faces. All right, so in front of us, we have Penn National Gaming, ticker symbol PEN, Gap Inc., ticker symbol GPS, and the Volatility Index, which is the ticker symbol VIX. Before we do dive into this, I will ask you guys to please give the video a like if you do gain value from it, or if you're holding any of these stocks already, and to subscribe to the channel if you are new around here and want to catch more trading and investing content like this. All right, so Penn National Gaming, let's get straight into this. We already have it open on Robinhood, as I'm sure you've already seen. So Penn National Gaming, ticker symbol PEN. PEN is a casino operator with big ambitions in online gambling. They also own a 36% stake in Barstool Sports. If there's anything that this new retail trading movement has taught me, it's that people love gambling. Gambling is nothing new to the human species, though. It's a tale as old as time. It's in our nature to love gambling. People love the idea of easy money and the potential to multiply their capital with minimal effort, although many of them lose the majority of the time. Considering many states are beginning to legalize online gambling, and we live in a world that is trending digital at a rapid pace, I feel this company has a ridiculous amount of growth potential ahead of it. Plus, Barstool Sports is a media powerhouse. This is a great partnership decision on both ends. Although I tease Dave Portnoy, king of the day traders, a lot, I absolutely love that guy and think that he is a marketing genius. All right, so that is the primary driver on why I'm very bullish on Penn National Gaming right now, is their partnership with Barstool that they did close a few months ago. Okay, so Barstool has a very devoted, very solid audience, okay, and who like really loves their content. And it's their demographic perfectly aligns in my mind with the demo that Penn National Gaming should be targeting for their online gambling, and that's why they are a very dangerous duo in my mind. That's why I'm bullish on Penn. They're part of a duopoly in my opinion. Them and DraftKings, at least as far as public companies are concerned, who are into the in the online gambling sector. And I think DraftKings, to be honest, I think it's a great company, but I think the stock is currently a little overvalued, and that is why Penn National Gaming is a better bet in my mind as opposed to DraftKings if you do want some exposure to this sector. So that aside, let's take a quick look at the charts here. Up 5% on the day, so it's pretty good. On the week, flat month. It's had a very volatile month, okay, and it's not surprising in this current market with so much volatility. Penn has seen some volatility, significant volatility that is, over the past month, up over 220% this past 3 months. Like many things, it did successfully bounce back from the lows, and it took a big hit, okay, in March when we had the liquidity crisis, when the markets crashed. As a whole, pretty much every stock crashed. Penn went down to $4.50 from a high of almost $40. Okay, so crashed like 90%. They really took a beating, even more significantly than a lot of other places, because they do operate casinos as well. And I think a lot of people associated the casino ownership, obviously, and the fact that sports were shutting down. It makes sense why this sold off very significantly. But I think as people did begin to realize that partnership with Barstool was super significant, and again, online gambling is a whole new frontier with so much potential, I think a lot of people did pour back in. Plus, DraftKings was on an absolute tear over the past couple months, so that definitely contributed, like kind of guilty by association, you know. But it does worry me a little bit that Penn is scratching all-time highs again, especially in this terrible, objectively terrible economy. I don't care if things are reopening or not right now, but I think that if you are going to bet on the equity markets and you do believe equity markets will continue to go up, then I think Penn National Gaming is a great investment. And trust me, guys, my money, I am invested to some extent in each of these. So always know my money is on what I'm saying right now. All right, let's move on to number 2, which is Gap Inc. So Gap. Right there, GPS. Surprised I didn't get, I mean, Gap was obviously already taken, but it would have been the perfect opportunity to get Gap as your ticker symbol. All right, so Gap Inc. Gap is an American clothing brand and retailer. Gap may seem like a washed up retail brand, which they were, but they recently signed a 10-year deal with Kanye West's Yeezy brand. Up until about a week ago when this deal was signed, I never would have even considered trading this company unless I was shorting it. Although retail is in a terrible place right now, brand is stronger than ever. Like it or not, Kanye has proven to be a master of both branding and marketing. In my eyes, Kanye could single-handedly reestablish Gap as the great American brand it once was, a true phoenix from the ashes story. All right, so Gap, again, I would have never even considered touching this company up until a week ago when this deal was signed. Gap, I mean, they've completely lost all relevance within the clothing industry, within brand. I am fairly involved in this sector. I was actually involved in a clothing company prior to trading a lot, and to where this kind of became my profession. So, I mean, Gap has definitely lost their luster over the years. I mean, look at this chart on the 5-year scale. It's even worse on the 10-year. So Gap has consistently just been falling year over year for the most part, and they are pretty much at an all-time low. I won't get into the Robinhood itself, doesn't go past 5 years, but I mean, Gap 5 years ago was, let's get my finger all the way over here, at about $40, and it's about $12 now. Okay, it's still about a $4 billion company, decent size, but Gap has over the years lost so much of its luster, rightfully so, because brand is so meaningful. But that is why I think the tables have really turned for Gap. Again, them signing a partnership with Yeezy, or Kanye West and Yeezy, which is, I mean, again, like it or not, he has established himself as a powerhouse in branding, and the Yeezy brand is a multi-billion-dollar brand in itself. And I think just the partnership with Kanye will definitely leverage Gap and make consumers think Gap is a cooler brand than they ever have, or at least have in the past decade or so. Okay, so very bullish on Gap. Again, it is pretty much at an all-time low, aside from obviously when everything crashed back in March, April. They did hit a low of $5.50. Since then, they have over doubled. But again, what in this market hasn't doubled since that crash for the most part? But again, retail, tough place right now, but I think they could really pull through in terms of the brand. All right, so last but not least, let's look at the VIX, the volatility index. So VIX actually doesn't have a tradable stock in itself, but there are a few plays that you can trade that are ETFs of the VIX, and I will show you the one that I choose, and it's called VIXY. So ticker symbol VIXY. VIXY is part of the VIX. It's an ETF that tracks the VIX, but I will explain to you what the VIX is if you're not familiar. The VIX is an index that measures the stock market's expectation for volatility. If you've watched any of my recent content, then you know that I believe the general equity markets could begin to see another significant pullback this month. I know, don't fight the Fed, stocks only go up, the old guard is dead, but I simply can't convince myself that the terrible macroeconomic reality won't catch up to the markets at some point, at least to some extent. When the markets see blood, the VIX is a shark. I believe we'll see some rough waters ahead, but that's what the VIX was built for. Gold, silver, and crypto are also great hedges in my eyes, but that's for another video. All right, so again, if you have seen any of my recent content, I did post a video not too long ago talking about how I think we could see another significant pullback in the equity markets this month, just due to the fact that general consensus has become that stocks only go up. Okay, stocks will continue to go up. Don't fight the Fed. Again, the old guard is dead. The Buffetts are losers. Day traders are winners. Mr. Dave Portnoy. Again, hats off to you for taking this round, but I don't think that this can last forever. I don't care how much money the Fed prints and injects into these markets. Obviously, it has kept them floating. It has proved successful and effective up until this point. But I mean, the economic reality realistically isn't getting any better. Like, places are reopening up, realizing they can't reopen up, and so many people, even once places do go up, like, unemployment is not never, but it's going to take years and years to get back to the levels that we were at pre-pandemic and pre-shutdowns. So I don't think the economy will ever be back at the levels it was at the beginning of 2020. That said, I've said this many times before, everyone knows this at this point, the economy and the markets are different, but they're completely unrelated at some points, and I can't convince myself that the market won't catch up with how terrible the economy is at some point in the near future. There are a lot of other catalysts coming up in regard to why I think the market will fall as well. I'm not going to touch on that now. Again, I want to keep this brief. And as I said in the end, gold, silver, and crypto are also great hedges in my eyes. Okay, so I will make more videos on those in the future. That's what the VIX is, to sum this up. The VIX is pretty much a bet on the fact that the market will fall. When you see volatility, volatility is rapid movement up and down, and that is what the VIX tracks, specifically in the S&P 500. Okay, so when you're seeing some rough waters in the S&P 500, that's when the VIX thrives. All right, let's take a quick look at the charts, and then we'll close this video out. So on the day, VIX has actually seen some rough waters over the past week, month, I mean even 3 months. But you can see how directly correlated this is and how well this does when the market crashes. Okay, so you see it went from about $10 to about $56. So we'll call it a 5x. It's like $11. That's why. So a 5x. This is one of the few assets that will 5x when the entire market loses 90%. Okay, so when the market crashes, when general equity markets crash, the VIX thrives. Okay, and this is a good hedge, even if you do think the markets will do well, and it's very possible that they can. Okay, the Fed might be able to keep things stable. The retail investor movement might be able to keep this market propped up, and this might be a complete paradigm shift, which I am open to. But it's never. I mean, it can hurt a little bit, but in my opinion, it's wise to hold hedges to the general equity market. Okay, again, general consensus has become that stocks only go up. No one thinks the market's going to crash again, and that's what scares me. That scares me that is like the general way of thinking at this point. And it can't hurt to have some short positions. Shorts say I will upload a short video soon on my top July shorts. But just having shorts on general equity markets and having positions, even calls on the VIX. Just because it is a hedge to, just in case the markets do fall, even if you're bullish, in case the markets were to fall, it hedges your bullish bets a little bit. Okay, so we will call it there, guys. Please let me know if you have any questions about these stocks. I'm very bullish on them. If you want to know exactly which positions I have on these companies, you can check out my complete portfolio and daily newsletter down below. It's exactly as it states. It's a complete breakdown of every call option, every put option, every stock position, even cryptos if you're into that. Again, crypto is a very good hedge in this market right now, in my opinion. But you can check that out in the first link down below. Along with that, I do send out a newsletter on during market hours of every trading day, where I talk about the trades I made that day, why I made those trades, as well as just my general thoughts on the market as a whole. More real-time updates from me. So check that out if you're interested. If not, no worries at all. But yeah, drop a comment if you are already invested in this, in any of these, if you think I've missed any key points in regard to these companies, or if you're excited about any stocks for the month of July as well. All right, so I appreciate you guys watching, truly do, and I'll see you guys next time. Until then, take action, make waves, peace. All right, later, guys.